by doing the right thing. All right, still doing the Russell, the weakest of the week, IRTC, this time Irhythm Technologies. But man, I just stumbled upon this crazy theory there, melt up. And kind of makes sense a little bit that if there's a meltdown, you always have to look at both sides of the coin. My subconscious, or probably some analysis I did, discarded, or I didn't think that there could be an eventual crazy extenuation wick to the top side, defying all logic, where everybody says this time it's different. And I thought we could have done that, maybe not. I guess if I'm not 100% convinced that we've reached crazy stratospheric levels yet, that maybe we aren't there yet. Maybe that's what we need. I wasn't trading back in 2001 or 2000. Was that what happening in the .com, which we didn't see in 2008? Because 2007, 8, the rollover was smooth. It just went down. I don't remember to the moon type scenarios. 2001, if somebody knows, maybe there was more euphoria, maybe crazy IPOs. So keeping an open mind, but as long as the Russell doesn't close above its 12-month moving average, I'm still going to target the weak ones. And even on an update today, here's my Russell 2000. I sorted by worst performers. And when I see those little flags, these are previously flagged stocks that I had flagged. And when I see that there's a stock that I flag as a weak prey in the Russell, and then it still pops up again in the negative in the top 10, top 20 underperformer for the day, it's a big warning sign. And when I see patterns like that, you pretty much see what I'm looking for most of the time. A nice stage 2. You want that stage 2 to go up. You want to see that. You want, if you short, you don't want to short at the bottom. You want to short when it's rolling over, when that stage 2 has turned to stage 3. And that's what happens here, far away from the 12-month moving average. Up, big red candle, not healthy. Another red candle, lots of noise, price action, buyers coming in because you still have an inclining 12-month moving average, so that's helping you, the stock, go up. But that's slowly damaged. Oh, look right there, big warning sign, close below 12-month moving average. Getting pulled back up, but it gets harder and harder and harder climbing up that hill with this. Every time you have those red candles, that's a leg, shotgun, poof, somebody just jacked your knee. And it gets harder and harder. And then that 12-month average says, look, that's your lifeline. It just starts flattening out and then starts roll over. So right now, price action below your heart monitor for your lifeline. And you're slowly going back in Benjamin Button mode to whence you started. You're going to go back. And you see, this is what you want, small candles. And when you see that crazy volatility versus what the type of volatility you had before, there's a big warning sign at the top. Especially look at the monthly candle chart. Tried once, twice. So that's what I am looking for as a stage 3. Or as a top, if I'd be closer to the breakout line, well, I wouldn't be considering it because I'd be above a 12-month moving average, and I wouldn't short a stock when I'm above. That's why that scenario that I'm envisioning now is that. But it has nothing to do with bear bias or bull bias. It's just that the price action is below that 12-month moving average, so that's the scenario that I'm more closest to happening right now. All right, measure move, paste arrow. Oh, almost to the perfection. Let's add that. So there's not a lot of data. Maybe this was an IPO back in 2017. Most likely, if I don't have data before. So a lot of, not a big strong base anywhere close. So after the stop, if we have it close below 68, that's my measure move. Bring me back down. All the way back here to a wall, a small wall. Previous resistance, turn support. Whoa, tested. No, breakout. That was a nice breakout. That could have been a signal to get in back in the days. Yeah, another one here. And here's my target pretty much. I like the symmetry of that target when you reach no congestion area right there. Natural support right here, tested once. That could serve as a bounce on smaller time frames. So we're going to leave that mark there. And there's another level right here, and that's the wall, previous resistance turn support. So always identify your monthly chart, define support, resistance, and those are the important levels that we're going to look at on the weekly chart right now. Helps you imagine the ups and downs, downs and ups. So after being a huge overperformer of the Russell, which is great, you want to be in a stock like that. That's actually a super duper beautiful stage 2. That's where we had our line. You had the breakout on huge volume right here, inclining 30-week moving average. The 12-month moving average was just starting, going up. Huge red volume, green volume, awesome. Didn't have enough. I think you need 52 weeks to start comparing to the Russell or the index. But you're right here, you're overperforming. It's just beautiful, beautiful. Always overperforming the Russell. So why go long the Russell when you could just go long a stock that's out overperforming it? That's like one of the premises of one of the Stan Weinstein system. The beauties of it, just take the best of the best or the weakest of the weakest, and you're just adding so much in your favor. If you're choosing an underperforming stock in the index that's going up, it could save you, but instead of doing those 20, 30, 40% moves, you'll be doing 10, 5, 15%. And same thing going down. If you're choosing underperforming stocks and the Russell does manage to go back up, you have some chances. Since you're underperforming the Russell, you could be one of the laggards, and that could actually save you, minimize your losses because you're underperforming the index. So if the index going up 2%, you might just go up 1. It's just putting that extra easy, just putting more edge on your side, doing it like that than just going for the index. All right, so beautiful stage 2, Ichimoku cloud, support, beautiful, never closing below, nice opportunities to get on, continuation, the breakout right here. Oh, volatility, scary, scary stuff. And 1, 2, 3, no, you need a break on the 4th. So if I had a valid trend line that could have got me out above my 30-week moving average, because here would be the last signal to get out right here. I don't see it. 1, 2, 3, no. So here we are today. As soon as you close here, you never buy, you never stay in a stock if you're below 30 moving average. Stage 3, Ichimoku cloud, bring the price action back up. Oh, we're going back. Look at that breakout, nice volume in February of 2019. And a lot of stocks are doing that, strong rallies. But after that, didn't quite make it. End of February, and getting sold into huge volume right here. And let's check it out. When there's a wick, just going to put that as a marker. When there's a wick right there, the buyer's coming in. If you don't want to get trapped, look at red volume, and you're imagining it just happened here, you could zoom in on the smaller time frames and see the distribution of that volume. So the week started here, 25, 26, 27, 28, 29. And so the huge red volume was on Monday, Tuesday, Wednesday of that week. And there's still a wick, so you could say, let me check. And so that's a pretty solid candle, small wick. Most of the volume was on those down moves right there. And some green volume on the way back up, shrinking volume, and now turning back down, increasing red volume. Good old-fashioned signs of a stage 4 decline right there. So there's a pullback on the daily or on the 4-hour chart, but on the weekly, it's just going down right now. And we are starting to just underperform, going to underperform territory on huge volume below Ichimoku cloud. So the buyers came in, it closed above the Ichimoku cloud last week, so you couldn't have really shorted there, but this week, if it closes below the Ichimoku cloud, you could take your half position right there, but knowing that here there's some monthly defined support. It could sink, it could bounce back up, sink up on the monthly, so you could have a week or two above, and then after that go back down, and then you could take another position here and expect bounces on those levels. So you don't know how good those support are going to hold until you actually test them, but knowing that they're there on the monthly chart is going to help you better choose those lower risk environments. So once you have a monthly close below each of these levels here, you know that's going to protect you. Use that 30-week average going down to give you that extra confidence to have a low risk environment entry on that stage 4 decline. So that could just be the beginning. We had that big target on the monthly, remember, that line right here, add to measure move. So swing rule, giving you some possible targets. If the stage analysis lets you, if it's cooperating and it never challenges the declining 30-week average, let it ride until the price action decides to go back above. I've drawn this a lot of times. So you might even be able to capture your profits a little lower. But it's good to know the swing rule. Stan used it to grab some profits. It's good old classical charting. And I've noticed often that they match pretty much with end of cycles or peaks or wherever the stages usually starts ending. It matches pretty close. But sometimes, and that's the beauty of a stage analysis, is you're able to go further away than these targets and really ride long times stocks as long as their stage 2s goes up. And you're able to ride them because of the way you position your sell stops using Stan Weinstein stage analysis. All right, so stage 4 decline. It's the week of the week. These are all symptoms of a weak stock. You should not be having crazy red candles like that in an uptrend. You should not be below declining 30-week average in an uptrend. You should not be below Ichimoku cloud defined support in an uptrend. Check. Underperforming the index you're in. This one's a shortable stock. All right, guys. Thanks for watching.